Have you ever looked around and just wondered, why do some people seem to build wealth so easily, while so many others work their tails off their entire lives and just struggle? It's a huge question, right? Well, the answer, and this might surprise you, has less to do with how much money you make and everything to do with how you think about money. So that's what we're going to do today. We are going to build a complete blueprint for how to think and act like a real investor.
All right, here's our game plan. We're going to break this all down into 5 simple but powerful parts. We'll start with the right mindset, because that's where it all begins. Then, we'll dive into the single most important rule of money. After that, we'll construct a 4-pillar framework you can use for any investment, see how to put it all to work, and then finally, we'll reveal the one asset you have that's more valuable than anything else. You ready? Let's do this.
Okay, first things first. The path to building real, lasting wealth, it doesn't start with a hot stock tip from your buddy or some can't-miss real estate deal. No, it starts right up here, in your head. It's about a complete shift in how you see the world of money, a shift away from pretty much everything we're taught growing up.
This quote from Robert Kiyosaki's legendary book Rich Dad, Poor Dad just nails the whole concept. See, he had 2 father figures in his life. Both were smart, hardworking guys. But man, their ideas about money were polar opposites. His poor dad, his biological father, always said, go to school, get good grades, and find a safe, secure job. Climb the corporate ladder. But his rich dad told him something totally different. He said, don't work for money, learn to have money work for you. That one little difference in mindset created 2 completely different outcomes.
Now, this diagram right here, this is how you visualize those 2 mindsets. It's called the cash flow quadrant, and it's so important. Look at the left side. You've got E for employee and S for self-employed. If you're over here, you're trading your time for money. Simple as that. If you stop working, guess what? The money stops coming in. But now look at the right side. This is where the wealthy play. B for business owner and I for investor. People on this side build systems or acquire assets that make money for them, whether they're physically working or not. And that's the whole game, right? The entire goal is to shift your primary income source from the left side of this quadrant over to the right.
So, the big question is, how do you actually get to the right side of that quadrant? Well, it all boils down to understanding one incredibly simple but powerful rule. Seriously, this is the bedrock of all financial education. If you can get this one thing right, everything, and I mean everything else, starts to fall into place. It's really this simple. An asset is anything that puts money in your pocket. That's it. Full stop. The rich, the wealthy, they spend their entire lives focusing their energy and their money on one thing and one thing only: buying and accumulating assets. Their whole financial world revolves around this one idea. And then there's the other side of the coin. A liability is anything that takes money out of your pocket. And this right here is the trap. This is where so many people get stuck. The middle class spends their money buying liabilities that they think are assets. And that's why they struggle, because they're accumulating expenses instead of income, no matter how much their paycheck goes up. And this chart just lays it out perfectly, doesn't it? Look at the left column. Assets. Stocks that pay you dividends. Rental properties that give you cash flow every month. Businesses that work for you. See the pattern? They all put money in your pocket. Now look at the right. Liabilities. That car payment, credit card debt, subscriptions you forgot you even had. And yeah, for most people, even the mortgage on the house you live in. They all take money out. The goal isn't to live without liabilities. It's to use the income from your job to buy assets and then let those assets pay for your liabilities. Game changer.
Okay, great. So we know we need to buy assets, but which ones? How do you look at an opportunity and know if it's a smart move or just a total gamble? Well, you need a system. You need a blueprint. And this 4-pillar framework is exactly that. It's a process you can use on literally any potential investment. Stocks, real estate, crypto, businesses, you name it.
And here they are, the 4 pillars that will support every investment decision you make: fundamentals, technicals, cash flow, and risk management. Just think of this as your pre-flight checklist. Before you put any money on the line, you run the opportunity through these 4 lenses. This is how you stop speculating and start investing like a pro.
Let's start with pillar number 1, fundamentals. This is all about answering one simple question. What is this thing actually worth? I want you to forget about the sticker price for a second. We're digging deeper. We're looking at the health of the company, the quality of its management, what's happening in its industry. We're trying to figure out its true intrinsic value.
This analogy just makes it all click. Okay, picture this. You find a game-worn suit from Michael Jordan's peak, and the price tag is $1,000. But you've done your homework.
your fundamental analysis, and you know that a serious collector would easily pay $5,000 for it. That $4,000 gap, that is the intrinsic value you've uncovered. The whole point of fundamental analysis is to find assets that are on sale for way less than what they're actually worth.
All right, next up, Pillar 2, technicals. So if fundamentals are all about an asset's value, technicals are all about its price. A price chart isn't just a bunch of random squiggly lines, it's a story. It's a story about supply and demand, about the battle between human emotions, greed and fear. And learning to read that story can help you figure out the best time to get in and when to get out.
And this is a perfect way to picture it. Imagine a chart. Sellers are saying, nope, not selling for more than this price, creating a flat ceiling. But the buyers, they're getting hungrier. Each time the price dips, they jump in sooner, creating higher and higher floors. You see what's happening? It's like a pressure cooker. Greed is building and building until, boom, the price often explodes upward. That's a story you can literally see on a chart.
Pillar 3 is where the rubber really meets the road for long-term wealth. After you've figured out what an asset is worth and what its price story is, you have to ask the most important question of all. How does this thing pay me? This is the cash flow pillar. We're looking for assets that put money in our pocket month after month, year after year.
You know, the power of cash flow is just immense. It gives you a steady income to pay your bills, which, by the way, is the definition of financial freedom. It also gives you more money to reinvest and buy even more assets. This creates a compounding machine, a snowball of wealth that just gets bigger and bigger on its own. This, right here, is the true engine of passive income.
And that brings us to our final pillar, the one that most beginners completely ignore, but the professionals are absolutely obsessed with: risk management. Look, investing is not just about how much you can make, it's also about how much you can not lose. Before you ever put a single dollar into an investment, you have to have a crystal clear answer to the question, how do I protect myself if I'm wrong?
This teeter-totter analogy is such a great way to understand a key strategy called hedging. Imagine the dollar is on one side of a teeter-totter and a gold coin is on the other. If the value of the dollar goes down, what happens to gold? It usually goes up, balancing things out. It's about owning assets that move in opposite directions to protect your overall wealth from wild market swings. It's about playing defense just as hard as you play offense.
Okay, so we've got our 4-pillar blueprint locked and loaded. Now let's look at how we actually put this thing to work. Generally speaking, most investment strategies fall into one of two big buckets, and you really need to understand both to build a smart, balanced portfolio.
So on one side, you have cash flow investing. This is our Pillar 3 in action, right? You're buying assets specifically for the steady income they produce. Think of a landlord collecting rent checks or a stockholder getting dividend payments. Then, on the other side, you have capital gains investing. This is what most people picture when they think of investing: buy low, sell high. Both of these are totally valid strategies, and a truly smart investor knows how to use our 4 pillars to play in both sandboxes.
So what does this look like in the real world? Well, this chart is just one example of how you might design your portfolio. Maybe the huge core of your portfolio, say 70%, is in solid, reliable, cash-flowing investments. Then you might set aside smaller chunks, maybe 10% for some higher-risk, speculative, mad money plays, another 10% for those hedging assets to protect you, and a final 10% in cash, so you're always ready to jump on a great opportunity. Now, your numbers might be different, but the principle of allocating your capital on purpose, that's what's absolutely critical.
We've covered a ton. We've talked about mindset, the #1 rule of money, a 4-pillar blueprint, and different strategies. We've talked about stocks, real estate, all sorts of things. But there is one asset, one single asset that is more powerful, more valuable than all of the others combined. It's the one investment that truly guarantees your success no matter what the market is doing.
And there it is. The single most valuable asset you will ever own is your financial education. Because without it, you're not actually investing. You're just speculating. You're gambling. Your education is what lets you spot the intrinsic value in that Michael Jordan suit. It's what lets you read the story in that pressure cooker chart. It's the one thing that turns what looks like a risk to everyone else into a calculated, systematic move for you. The time you invest in learning this stuff, that will always be the highest return investment you ever make.
So there you have it. The blueprint is now in your hands. It's a framework for thinking differently, for analyzing opportunities with confidence, and for building a financial future on your own terms, by design, not by default. The only question left is, what are you going to build with it?